Hey everyone, this is Ronak Ahuja. I welcome you all again. In our recent videos, we had been talking about the major amendments and their impact on the taxability of equity shares, equity-oriented mutual fund, and debt-oriented mutual fund. In case you haven't watched that video, do check out the comment section where the links of those videos have been shared. Those videos are equally important. Now, these major amendments are applicable with effect from the 23rd of July 2024. And this video is a continuation of those earlier videos. In this video, we'll be talking about the taxability of immovable properties such as land and building or both. So, in order to understand the amendments that are applicable on the taxability of immovable property, we suggest you to stick around till the end so that you understand the very basics of it. The first amendment applicable from the 23rd of July 2024, that is with effect from financial year 24-25, is the reduction of holding period from 36 months to 24 months for qualifying as a long-term capital asset. Now, what does this mean? This means in order to take benefits of the tax rates applicable for the long-term capital asset, the taxpayer was required to hold that capital asset for a period of more than 36 months before that capital asset was sold. This means that the benefit of that rate was applicable only if that capital asset was held for more than 36 months. If held for less than 36 months, it used to qualify as a short-term capital asset and any gain arising therefrom was treated as a short-term capital gain. However, this period has been reduced from 36 months to 24 months with effect from 23rd of July 2020. Now, the big question is, how does this amendment impact the taxability of immovable property? The answer to this question is, there is no impact of this amendment on the taxability of immovable property. Now, why is it so? This is because the holding period before the date of amendment was also 24 months. And it remains the same even after the amendment date. That is, it would still be 24 months after the amendment date. So, there is no impact of such amendment on the taxability of immovable property. Now, this means in case an immovable property is held for more than 24 months before that immovable property is sold, then in such a case, any gains or profits arising from the sale of such immovable property would be treated as a long-term capital gain. And in case it is sold before the 24 months complete on the date of sale, then any incomes or gains arising from the such sale would be treated as short-term capital gain. Now, there are some amendments to the tax rates in case of income from capital gains as well. So, let's check the tax rates in case of short-term capital gains and the long-term capital gains arising from the sale of immovable property. This is covered in our next segment. Now, in case of short-term capital gain on immovable property, that is, in case an immovable property is sold within 24 months from the date of its purchase, then the applicable tax rates would be the normal tax slab rates. That is, in case of individuals, if they opt for the old tax regime, then the old tax rates would be applicable, and in case they opt for the new tax regime, then the new tax rates would be applicable. However, in case of companies, the thing is little different. In case of domestic companies, the normal slab rates could be 15%, 22%, 25% or 30%, depending upon which concessional rate of section they choose to opt for. That is, if the company chooses to opt for the concessional rate of tax offered by section 115BAA, then it would be taxable at that rate, provided they fulfill all the conditions that have been specified therein before choosing that concessional rate of tax. Now, How do we calculate the short-term capital gain in case of immovable property? We calculate it as follows. From the sales consideration that we receive on sale of immovable property, we reduce the cost of acquisition, that is the purchase price of the immovable property, and then we reduce the cost of improvements, that is cost of major repairs. Again, we reduce the transfer expenses that we incur while selling a property. Once all these expenses are reduced, we arrive at the short-term capital gain, and this short-term capital gain is taxable at the normal tax slab rates that we just discussed. Now moving on to the long-term capital gain on immovable property. In case of long-term capital gain on immovable property, that is, in case a property is sold after 24 months from the date of purchase of such property, then in such a case, the long-term capital gain that would be applicable would be 20% with indexation. But this tax rate is applicable only up to the 23rd of July 2024. In fact, up to the 22nd of July 2024. As because we have a change in the tax rates with effect from the 23rd of July 2024. So let's first study the first part, that is from all those immovable properties that have been sold between the 1st of April 2024 until the 22nd of July 2024. In case any immovable property that is sold between this period, then in such a case the tax rate that would be applicable would be 20% of the long-term capital gain arising from the sale of such immovable property. However, here the indexation benefit would be available to all the assessees. Now, how do we calculate long-term capital gain in this case? In this case, we reduce the sales consideration that we receive on the sale of immovable property by the indexed cost of acquisition, then the indexed cost of improvement, and then all the expenses that are incurred in relation to transfer of such immovable property. After deducting these three expenses from the sales, we arrive at the long-term capital gain. This would be taxable at the rate 20%. Now, let's check for the applicable tax rates in case the immovable property is sold on or after the 23rd of July 2024. In case it's sold on or after the 23rd of July 2024, then the applicable tax rates would be 12.5% without the indexation benefit. Yes, you heard that right. The indexation benefit will not be available on the sale of immovable property if it's sold on or after the 23rd of July 2024. However, there is one exception to this rule, and that is for an individual or an HUF who is a resident. In case the taxpayer is a resident individual or a resident HUF, then the taxes would be calculated as follows. First of all, we'll calculate taxes at the rate 20% by giving them the indexation benefit. Let's treat this as first case. And then in the second case, we'll be calculating taxes at the rate 12.5% without giving them the indexation benefit. Now, if the taxes calculated in case 2 are greater than the taxes calculated in case 1, then the excess amount of tax calculated in case 2 will be waived off, and the taxpayer will not be required to pay such excess amount of tax. Yes, this is the benefit that is available to the individual resident or the resident HUF. Now, let's see how do we calculate taxes here. First of all, we determine the sales amount of the immovable property, and then we reduce the indexed cost of acquisition, and then the indexed cost of improvement, and then we reduce the transfer expenses. And then we arrive at the long-term capital gain, on which we'll be applying 20% with the indexation benefit. This is case 1. Now in case 2, we'll be calculating the sales value again, and then we'll be reducing the purchase price, that is the cost of acquisition, without the indexation benefit. And then we reduce the cost of improvements again without the indexation benefit. And then we reduce the transfer expenses. This is how we arrive at the long-term capital gain. And on this long-term capital gain, we'll be applying the tax rate at the rate 12.5%. So this is how we calculate long-term capital gain on immovable property. Now let's quickly move to the summary. So this was the taxability of immovable property and the impacts of major amendments on the taxability of short-term capital gain and long-term capital gain of an immovable property. In case you couldn't follow, please drop us a feedback in the comment section or mail us at talklevies@gmail.com. Thank you and stay tuned for more videos.